Thank you, Manolo. Thank you, Barbara. Welcome, everyone. Very good to see you here, Anna. Should we get straight into it? Because I think the point that Manolo made right at the start, which is there are always crises, is true, but there's also a serious absence of growth. We're having a conversation here a few weeks after the IMF gave what was a pretty downbeat assessment of growth, a pretty big set of divergences in the world around growth. So let's just start, if you would, with the big picture, Anna. When you think about competing for growth, what does that actually mean to you?
So it's great to be here, Manolo. I'm very reassured that Manolo was an alferez in the Spanish army. Issue is that I think that was more than a couple of years ago. So anyway, it's yeah. So you know, we've said this. I've said this. I don't know how many times in the last 12 months. You know, growth is the absolutely top priority, should be for governments, for companies. And the reason is simple. Without growth, there are no social services. Without growth, we cannot, you know, generate the taxes that help us to fund the public services. And so growth is absolutely essential if we want green growth, if we want inclusive growth. And the fact is that the trends that we are seeing today, and this is important. So demographics, we're going to have to really fund the pensions. There is a huge need for higher returns on investment and more pension receipts in the next few years. We have to fund the green transition. That's going to require trillions more. Again, that is prerequisite so we can transition from brown to green, is that we get growth. But we also have, you know, and this is obviously a situation we've made worse in the last few years, the debt of governments, sustainability. We can only, and it's a very simple math, you know, if governments are paying more than what we're growing at, so if you're paying 3% interest and you're growing at 2%, the mathematics don't work. So there's a lot of, and this is across the world. And so at the end of the day, if we don't get growth, again, and this is something which is slowing down. If you look at the last decade, we grew less than the previous decade, and the next one, according to the IMF, is going to be even slower growth. So it's hugely important. The second point is, of course, that it becomes a financial stability issue. And so this is, again, we need financing so we can invest, so we can create the jobs we need, and the taxes and all that virtuous circle. And if you don't have growth, you know, financing, it's not going to be possible, because financial stability is also about that. At the end of the day, what we do have is the right diagnosis. If you think about what Europe is saying we want to do in Europe, is be the most innovative society. There is no way that innovation is going to happen if we don't translate innovation to the private sector, if the private sector doesn't fund that innovation. And so at least we know what the problem is. We know the idea. We now need to have a better plan.
So can we talk about competition for growth, both in terms of financial services, i.e. competition within banking, technology, etc., but also global competition for growth, and come back to that point about Europe in a minute. I think you've sometimes said that you're an optimist who worries, and it's a kind of neat formula because it gets on both sides of the equation. But right now, given where the world economy is, where do you sit on that spectrum of optimism and anxiety?
So, you know, nobody would do the job I do if they were not an optimist, right? And my definition of an optimist is somebody when you see a problem, you try to find the best solution. But I'm not just a business person, I'm a banker. And so in the very definition of banking is worrying about every kind of risk. Managing a bank is managing risk. Managing the economy is managing risk. And this is incredibly important. And I do worry more. There are more risks. Manolo said it. There is more and more risks. It's not like, you know, it doesn't exist. But I think what's important to understand is that we lived in a decade, probably until, I don't know, 2008 maybe, where risk was much, much lower. Geopolitical risk has always been with us. We've always had wars. There were less wars. There was less conflict. And we're sort of back. We're normalizing, unfortunately, to a world that has more geopolitical risk. And that has implications for commodities, for commodity prices, energy, inflation, and so on. And so I do think that the big thing, when we think about growth, anybody who has started a company or runs a company is making decisions about risk every single day. I always translate decision-making into numbers, probabilities. And there is never certainty. I mean, the only certainty is that we're all going to die and we're all going to pay taxes.
Thank you.
Everything, yeah. Some of us pay more taxes than others. I hope we can discuss that later. I don't mean me personally, which of course also, but as a company, as a bank. So, managing uncertainty is incredibly important, and in today's world, we're normalizing what has been the case for generations. I mean, in the 60s, we had, the Cuban Missile Crisis. There was a, it's been like this forever. And I think what wasn't normal was that for finance, what wasn't normal was negative interest rates. What finance was not normal is like, a curve of interest rates that was either flat or even inverted. There is a risk premium, a term premium, that is now positive again, so which again reflects the risk and the perception of risk. So I do think, again, we need to fundamentally rethink as a society. Society means governments, especially governments, regulators. Regulators take their mandate from governments, and regulators are actually making policy decisions. And this is something sometimes we do not really understand. So again, competing for growth is a much better term because, sometimes you think finance is some obscure thing, and the thing that really gets me going and I get really upset is when they, nobody in this room, I'm sure, but they say, oh, we are the real economy, like we are the unreal economy, right, in the banks. We're as real as they come. We finance. But
can I just ask you, I'm interested you talk about geopolitical risk, because I suppose all of us see that, right? All of us can see that, and we can sort of understand what the turmoil or uncertainty that causes. But there are these creeping changes. They're creeping changes. Some of them are big and obvious, inflation and interest rates, but for example, in technology, in the challenge to a bank like Santander from, for example, US banks or US tech platforms, how do you think about competition for growth in that context of the really big structural changes that are happening?
I don't think, it's not big structural changes. It's one huge, and there's many ways of calling this, really it's a change in civilization that we're going to go through, that we're going through. It's in the same way as in the Industrial Revolution. I was talking to somebody from academia, and they were saying that we are in 2023, it's the equivalent of 1870 in the Industrial Revolution. And so what we are seeing is the result of many incremental changes that is going to take us to an exponential change. And understanding exponential is very hard for us to visualize. I'm sure you've all seen these graphs, where suddenly things are growing slowly and then all of a sudden we use that a lot. But I think that's really what's going to happen in the next, 2, 3, 5, 6, 7 years. So we're all going to see it if we're still around in 10 years. It's not like our children, it's us. And this is what AI and what really these large language models mean. And if you think about, how somebody who has 30 years experience, and let's assume has very high IQ, knows more than somebody with 10 because they've learned more, they've listened to more. These LLMs actually have, by a factor of 6 or 7, and today they're not even, and nobody knows how much better and faster they will get, but we do know they will get better very fast. The amount of information they can process. So just go to ChatGPT or any of these new tools and ask them the question that we had Larry Summers at a dinner last week, and he was asking a couple of CEOs from the tech world, very simple question, which is this a type of change as we had in the Industrial Revolution, i.e., or when we invented fire, or is this just another trend? And the answer is, it's the first one. And so this is really what we need to get ready for. And this is the reason why Santander has to change and why Hector and all my team is driving change across Santander, because it's a fundamental change and it's going to come very fast.
But Anna, then just to explain to us, what do you think AI will do to banking?
Well, exactly what it will do, no one knows. But today you can go to ChatGPT and ask, what is the best book, the best recipe, because I have this list of goods in my fridge. It's not far when you're going to be able to ask, what is the best mortgage, the best advice, etc. So in the same way we defined in 2019 that Santander wants to be the best open financial services responsible platform, we now need to understand what AI means for our business model. But it's a much bigger change, because it's really going to change how we live our lives. It's going to change how governments govern, and it's going to require, and this is crucial, how we govern our society. And you know, I'm sure some of you have seen the cover of The Economist. Is the market economy dead? Right? I don't think it's dead, but it needs fundamental reform. And I've said this many times.
Well, let's talk about that, because we could just spend the day talking about the AI impact on the way we live our lives and the way we work. But there's a different read on competing for growth, right, which is really, I think particularly for Europe, a question which is Europe competing for growth? And if not, what does it need to do?
Well, you know, again, competing for growth doesn't mean that we do not have the right, let's say, vision. I think we do. I think today in the world we have two paths and not more. One is we go in the direction that we say we want to go in Europe. That is hugely important, by the way. I am very optimistic about what Europe can do. And I always say Europe has a range of options. When we are at the right side of that range, we're unbeatable. Unbeatable, because it's a combination of entrepreneurship and really not leaving anybody behind. But if we are at the other end, we're going to become a museum. And I really don't like when the Americans usually, and others, call us a museum. That could be the outcome. So what are the two paths? One path is innovation, and having the right idea is important, but then you have to execute. Then you need a plan, and there's different ways to think about how do you become the most innovative society, and that requires competing for growth. So we are competing for capital. As I said before, if you want growth, you need investment. There's limited investment to go around. By the way, one of the best regions to invest is the Americas, and especially Latin America. Of course, happens to be, we're the biggest bank in the region. But it is really important. We are competing with Mexico, with Brazil. We are competing with the US. We are competing with the world for investment. Unless we get right how we get to be the most innovative society, which means growth, which means allowing banks to finance the green transition, which means allowing banks to pay fair taxes. Fair taxes means let everybody pay the same as I do, and then you can raise my taxes. I've said this in public many times, because if I pay less taxes, I can invest more. That's going to be better for society in the medium term, and so on. So we do need to take that path. The other path, well, you take your pick.
But Anna, can I just press you on this point about innovation? Because it sounds great, and you hear, you know, certain speeches about innovation. But at its heart, when you look at Europe by comparison with kind of the big competitors, the US and China, Europe looks like a project devoted to a responsible, fair, prosperous society. I think it's hard to pitch it as the place that's the champion of innovation, and particularly in the light of what's happened in the US, Inflation Reduction Act, the impact on the green economy, the CHIPS Act, impact on tech. How does Europe compete with what the US is doing?
Europe has, you know, again, as I said, I think the market economy needs a fundamental rethink, but within what a market economy means in terms of democracy, strong institutions, you know, a market economy with some rules. I don't believe we can just leave, especially at times like this, just everybody, you know, we're going to discuss that later. You know, what is a critical infrastructure in the digital age and so on. So it means that, we have a range of options in terms of labor laws, in terms of taxes, in terms of competition, in terms of, you know, how we think about health benefits, public education. And we've shown that that is possible. Spain has been an amazing success story for the last 30 years. And, you know, there have been times when we've done better, times not so well. We still have, we have our governor who's going to speak about this, I'm sure, in a much better way than I, but there is a clear opportunity that we have taken in terms of reforming institutions, in terms of reforming, again, labor, education, and so on. And we've created we have more people working in Spain today than ever before, but we still have a structural unemployment that we need to fix. We need to give more opportunities. So we have done the right thing, as have other countries, by the way, at different times over the last 30 years. And so I think, that is what we need. Let's go and look at the facts. Let's go and look at what has worked. Let's go and look at where things could have been done better, and let's try to implement, the right policies. It's not rocket science. We know that you need to pay taxes, but if you pay too much, people are going to move. Or people are just going to stay home and, decide if I'm going to pay 60% of everything, I earn is going to go. And by the way, that's a real number. There are people and companies in Spain today that are paying more than 50% of their income to the government. That creates a huge disincentive. And it's not just, disincentive to those of us that are here. It's the opportunity cost of those that don't come, which takes us back to competing, right?
So Anna, we're going to come back. We're going to play a little musical chairs. We're going to come back in a moment with you and George and Francesco and talk about some of those issues, labour laws, taxes, the skills issues around competing for growth. But we're going to leave the stage and hand over to Jonathan Hill, Lord Hill, former Commissioner at the European Commission, and George Osborne, the former UK Chancellor, who are going to give, I hope, a picture on government and growth and the European outlook. And then, as you say, we're fortunate the Governor of the Bank of Spain is going to join, and he'll speak after that. And then we're all going to come back and sit and sort of put our heads together.
Right.
Anna Botín.
Thank you.
Thank you.